broadcasting, this is a good noise canceling headset if it's working properly, but as soon as I start broadcasting, of course, the gardeners decide, and the pool guys, they come at the same time. Anyhow, we'll see if the broadcast is going live over here. It should come up in just a moment, and I can follow along and look at the chat and all that good stuff. I don't know why there's a little bit of a lag, but I'm not a professional streamer. Anyway, hope everyone's having a good Friday. What I'd like to do on these streams is I watch some other streams sometimes, and it's just sort of looking at the screens. I want to try to make today a little bit educational as well. So I got a lot of stuff going on here. I always have a couple live accounts up, and these are done what we call the TDG way. We're trading pretty small, and I got it filled on gold. What a day today in gold, huh? So long at 23.60. That's pretty wild. That's probably a $70 or $80 move in gold just this morning. So this account here is started every month at 5,000. Balance is around 5,300. And I use it also for options. So I'll talk a little bit about options today. One position that I'm in is actually short the 5170 puts for next week. And obviously those are in the money a little bit as the S&P has declined lower here and everything's pushing a little lower. Love to see if I can find this broadcast over here. There we go. All right, cool. We got a whopping 7 people watching. There we go. Let me mute that. So if there's any of those 7 people that want to give me a quick 1 in the chat if picture and sound is okay, that would be outstanding. That would be very much appreciated. All right, so one live account here, $5,000 used mostly for options. Got some other positions. Got another tracking account here, about 10 grand in this account, and up a little bit today, mostly from some treasuries that worked out well this morning. And my whole thing when I'm teaching and educating is just using the micros, whether we're in a prop program or not. I'm connected to a number of different prop accounts here as well. Trading 250,000s over here on these are Apex accounts. I go through this on some others. I don't pass these and put PAs in front of them. Excuse me. I pass them and then I just cancel them and I use them again for trading education. There's reasons I do that. It has nothing to do necessarily with the fact that that Apex isn't a great firm. It's one of the ones I definitely recommend. It has more to do with data costs and my time to actually pay for the conversions and then actually trade them. So they're a great educational tool. That's what we use them for in our TDG community. And essentially my position over there is, what am I? Basically short NASDAQ and long some S&P and some Dow. And then we got TopStep X going on over here as well. So we got TopStep X, which is, they've really come a long way. Those of you that are unaware, they've added all the micros now, which is fantastic. I'd love them to add the treasuries, and I'd love some of these firms to actually have. Thank you, everybody. Appreciate it. It'd be great if they would add some of the treasuries and the micro ultra treasuries now. If you're unfamiliar with the fact that there are now micro treasuries, there have been micro interest rate products for a long time. Let me tell you how you always get up to speed on that stuff is you want to go over to cmegroup.com. Go over to cmegroup.com and make sure you sign up somewhere. See how it says log in here? I can log in. Right here is where you can sign up. So they added 2 new products, Micro Ultra 10-year Treasury notes, and they also have the Micro Ultra 30-year Treasury bond, if you will. And the volume is great, folks, and these are 1/10 the size. So if you want to look at the specifications, you come over here, and you can see that each outright only represents $1.50. $1.56, whereas the larger contracts are $15.62. So it's truly 1/10 the size. And with what's going on these days with treasuries, here's the ZN right here. This is, we would call a bear continuation pattern. In other words, it's below our T line right here. But we came off nicely off of the 107, let's just call it 108 level. I actually sold some 109 puts here. That was not a fantastic day, but they were expiring today. I will get assigned. I'll let them get assigned. And then I'll just trade them from the long side, as obviously I'll be long from 109. But including the premium I brought in and some profits from some longs outright, it worked out okay. But here is the TN, and I don't think I can bring up the MTN on here. I don't think, maybe they will have data. Let's see, I haven't tried it in a little bit. No, because I'm first connected to there we go. Hold on. I'm connected to use your words, Rod, to NinjaTrader first, and their data, they don't have it on here. If I connected just to the API on Interactive Brokers, I would be I'd be good to go. So ask some questions if you'd like. Again, there's not many people that watch this live, but I want to try to turn it into something that can be a little educational. So if you have any questions, these are the two primary strategies that I just brought up on the screen. One on the left is called the range trader. It's a 30-minute volume histogram chart, and the one on the right is called stay in your lane. This uses standard VWAP bands. And we also have it on TradingView here. Let me bring up TradingView. So you don't have to use Trade of 8 or NinjaTrader. You can do the same thing on any. So let me just clean this up here. Here and here. All right. So there are a number of considerations as to when you would look to buy this green line here, this long, and your target would be VWAP here. Okay. Now, as you can see, the blue line here is VWAP. This red line here is a 34 EMA. Clearly, this has been a trend down day. I'm very reticent when people start to tell me about it's a trend day in the first 30 minutes of the day, right? We have to use a common language when we want to talk about what is a trend day and on what time period and things like that. But these are 5-minute. Clearly, this 34 has held perfectly, and this was a day to shift your thinking a little bit into selling touches of this and looking for this level to be your area in which you would go long. But today, I guess I could connect. I'm not going to connect anything over here. But today, just showing you the nature of the strategy is that this would be a long right here at 51.44. NQ, it would be at 18,079. Dow Jones, it would be at 38,100. Okay. And 10 out of 10 trader dentists can't dispute the line, right? You can say, I don't want to buy that there, or I like to trend trade, or I don't do mean reversion, or whatever you want. But the nature of this strategy is such that I can teach it to somebody in 3 minutes, okay? In terms of entry criteria and entry logic, right? Now, the next question that happens, of course, immediately is, where is my stop? Okay, the target, folks, from this bid zone down here, from here to here is called a bid zone. Okay, so I can put it in here. This is called our bid zone right here. Now, again, remember, we're not doing any situationally fluent switch to say, today I want to instead just be shorting 34 or shorting VWAP. Okay, so hold on there. Just a second. Ooh, got long the M2K right here. Everything pushing lower. Dow Jones, my ad will be at basically all at the lows of the session. Let me check over here because this is probably not going well. That's not too bad. Down $35 on a gold long after gold was, what did gold hit a high today of 24.80s or something? What was the gold high today? All right, so back to what's going on over here, just learning this particular strategy. This is our bid zone. And then this up here would be called our offer zone. If you look at the description for the broadcast, you can sign up for a 2-week free trial to come into the room and watch this in real time and kind of learn it in more detail, as well as get the whole setup for the indicators that are on this particular chart if you use TradingView. And these are 5-minute bars, and then over here, this is a Brickwick. It's a different Renko setting, and just a little different, but the levels are the same. They should be the same. So this is the NASDAQ. It's 18,081 is the -2. Come to the NASDAQ here, 18,081. You see those levels should be exactly the same. Where's the big one? Where's that big arrow? There we go. So right there, that's 18,081, and you got the same thing here. Oops. I am not a drawing tool expert. There you go, 18,081. Okay.
Order filled.
All right, question here. Ninjacators has automated system like what you were showing. It's called Tunnel Trader. So good question. So the strategy I'm showing is not automated the way I do it in the room for completely point and click. All right. So when we're trading with the 300 or 400 folks that we have in our trading group every day, we are doing a point and click just to learn the idea. But once you understand the theory and logic of any particular strategy, and by the way, to flex for I've been doing this forever. So if you guys know True Trade, Ninja, all the firms, let's just say it politely, have borrowed my stuff. Including even the bars. These bars were not my stuff, but they were originally developed by another guy named Rod and Roger Felton at Felton Trading. I believe he has since passed. So there's a lot of history behind all this stuff, of course. And I've been trading professionally since 2011 and every single day since 1994. I know I don't look that old. Anyway, every single day since 1994. I was fortunate to trade the very first E-mini in September of 1997 and traded the very first micros when they came out in May of 2019. So lots of history there. But in terms of automating anything, it's a great question. Once you understand the theory and logic behind any particular trading strategy, there's plenty of ways to add automation. And my suggestion generally is to just automate the entries. Just automate the entries, not all the logic, not trailing stops, don't associate ATMs with them or things like that. And by the way, I'm just going to hit the bid here. See if we can. There we go. So one of the ways to do it on Ninja is actually using something called Bloodhound for the logic, but basically it goes shark indicators. So shark indicators will get you done there. You can write it yourself in NinjaScript. You can also go over to TickBlaze and sign up for the early beta. I'm an investor in TickBlaze, so full disclosure, this is going to be the platform that I will 100% recommend and support going forward. And yes, we will have some automation logic built into a number of the strategies that I teach. But again, it will just be for order entry. So great question. Okay, so there's tons of different ways to, if that's what that particular strategy does. I keep this dead ass simple. I just want people to understand the logic behind entries, because the risk management is done on a session daily basis, meaning that we first establish a session risk budget for each particular session. If you trade for 90 minutes, that's your risk budget for that entire session. If you trade all day, fine. If you trade for 5 minutes, it's whatever amount of money is available to you to risk on a per session basis. And that informs or should inform most of your decisions. Then you can also, of course, manage things on a per trade basis, but the more active that you are as a trader, or if the strategy provides quite a few entries or quite a few entry opportunities, you have to really, in my opinion, base that on what your daily risk budget is, so that your decisions based on sizing and how many instruments you can trade and what you can do is based on your daily risk budget. Your only job as a trader is to not lose money. That's it. I just marvel at how difficult people make this. Your only job as a trader is to not lose money. Just don't lose money. Right? Well, can't I get drawdowns and this, and everyone goes through drawdowns and stuff. Yeah, sure. But they should be never exceed your daily risk budget. That way, if you have a daily risk budget of $200 or $300 a day, not 500 or 1,000 or, these dipshits that get FXAs and run them up at TopStep and, how I made $100,000. Great. Fantastic. Way over leveraged, not sustainable, not real trading. If you are able to lose $2,000 or $3,000 of a $10,000 account and claim that's just, that's just part of the game, it's not. You have zero chance. So the reason I show the micros here and have these smaller accounts is so that I can show that this works for prop programs. It works for growing a smaller account if you want. But I'm not here to say that you should be growing a small account. The beauty of these prop programs now is they do provide you leverage to select 1, 2, 3, 5 more accounts. And once you understand how to trade these small accounts properly per account, you can use trade copiers and then leverage yourself that way instead of over leveraging yourself in any individual particular account. All right, so essentially this is the stay in your lane strategy. I just logged into this paper trader the other day and saw that this isn't good. So look at this. There's a old contract here that's down $50,315 and you can't close it. So I'm gonna have to reset this. This is they should of course just close out any old contract or something. So short from 16,596. That was quite a while ago since we're trading 18,000s plus. But anyway, here I'm connected here now, so I can just show you'd sell here, you sell here, you can buy here, and buy here. And then your target is right here. Okay, so that would be the way this would be set up. And do the same thing here. Now, as you'll see, if you were buying every touch of the -2s, okay, this one worked up to there. This one worked. This is the first time you're taking kind of a sustained loss. You could have been stopped out there depending on your risk budget or whatever the case may be. And then here, same thing, I'll buy here. I was wondering. I had a short on there, but didn't come through. Let me put this in here. I guess there was. I'll drop this in here, and I'll also put it in the. I'll put it in the chat there. Really here, quick on TopStep X. This thing is fantastic. I started the day underwater on all these accounts. They got back to basically starting stack, but the copier here is great. So now I have 5 of them over here because I had this deal where you could get them for $5. Again, I won't be funding any of these. My goal here is to see how long they allow me to stay on these accounts at $5 when they did it as a little teaser thing. But great learning tool over here. And again, TopStep X now has, this is just obviously TradingView here if you're not familiar. And over here, I don't even have the volatility bands. I'm simply using just a 5-minute chart with a visible range volume profile attached. And there's some other entry logic criteria that's used here. We can buy new lows plus or minus a certain amount of ATR. look for a break above, close above the VPOC or highest volume node right here, which would be a break above, close above 118, 165. Could use that. That's for those that are a little bit more into momentum. But you would clearly be able to see here that you have this kind of channel going on that we're going to have to see if we can get above that particular channel there. If NQ gets to Dev 1, yes, correct. So, and let me show it to you over here. This is a live account. That's a buy right down there at 18,077. And I'll look to take it off there at 18,175. Let me move this over a little bit so you guys can see it. Let me see that. Did that make it any better? Looks like it's like cut off there. Oh, there we go. Okay. So now you can see the prices. Now, as you can see down there, 18,077 is about 70 points from current price, right? 65, 70 points. You can't do that with a full mini. I mean, you could, but wouldn't be doing too well in terms of the first rule of don't lose money. But with these micros, that's about $150 of heat. No problem. I'm up really nicely on the day. This account is up $656 today. And I don't know about all these adages like don't trade your P&L. That makes zero sense to me. That's like saying sit in a poker game with a certain amount of chips and don't make decisions based on how many chips you have. I mean, oh, screw it. Oh, that guy put me all in? Ah, well, since I only have $50 in front of me, that's not a big deal. If I had $5,000 in front of me, it would be a completely different decision, wouldn't it? So the only thing you're supposed to do is trade your P&L. The only thing you're supposed to do as an active day trader is manage risk relative to your daily risk budget. There's nothing wrong with playing with house money at all. Once you understand the power of quitting too, there'll be days in which you had to fight quite a bit just to get even or just to make it back. Hopefully you weren't revenge trading or doing anything that was toxic and not part of building positive habits, but provided that you were doing it all right and managed to fight your way back. If it was a fight and a battle and you feel exhausted, your emotional capital is drained, that's a day you quit. The day in which you're in a flow state and you're just making money and price is respecting the levels that you want it to respect, stay at it. Stay at it. Don't stop. So here on the Dow Jones, I'll have an ad at this swing level right here. Right there. These are 13-period swings on Ninja. I don't have these swings on the stay in your lane on the 5-minute because the swing levels on 5 minutes are not very useful. You have to set the sensitivity pretty high. But on these brick wicks, which are just modified Renkos with trend threshold offsets, okay? And remember, this style of what I'm showing you is only possible using micros in smaller accounts. Now, and what is a small account? Ready for this? Let me make this clear. Every single prop program is a ridiculously small account. They're not giving you $100,000 or $150,000. They're giving you $1,500 of risk, maybe $2,000. That is a ridiculously small account. If you have $15,000 to $25,000 of real money, then you are properly capitalized to trade one mini if you'd like. So right now on the Dow Jones, for instance, if this was a 3 lot of the YM, that would be $15 per tick, 3 times 5. And I would be able to instantly calculate what my risk is in terms of how much I would be down when I go to add at these next 2 levels. I can do this if I have about $30,000 to $40,000 of real money. I can trade a 3 to 5 lot of the Dow Jones. Here's how screwed up most of these programs are and how they're screwing up most of the traders out there. They're telling you can trade 5 or 10 or 15 minis in a $2,000 account. And then people are wondering why they blow up all the time. And I guess they're not wondering. And then they blame the firms and things. Use them as a learning tool to be able to properly size a strategy for small accounts using micros. I gave myself a few challenges, folks. I passed $300,000 evaluations at Earn to Trade, $250,000 and $300,000 at OneUp. I don't know if you guys ever remember OneUp. Only trading micros. Oh, but Rod, the commissions are insane. Think about it. A $300,000 prop program, at least at like ETF and at OneUp Trader, the drawdown was $6,500. That means that 100% of my account value is $6,500. How can I trade minis in that account? You can't. Now, once you really develop your skills and you have high probability entry points and you really can stick to a daily risk budget, which should not be more than 20% of your account value, if you're doing a $50,000 Apex program, your daily risk budget cannot exceed $300. If you abide by that, here's what's going to happen. 3 things. You ready? 1, you will never blow up. No, I can blow up. I'll go through a big, but all things aside, like, you know, I'm just saying if you set it up so the computer stopped you at $300, which is, by the way our prop program will work on TickBlaze, you'll be able to set an absolute shut off, which they now have at TopStep X too, where you can shut yourself off. You'll never worry about the trailing drawdown because it's not a concern. Dow Jones heading lower. NASDAQ heading lower. Let me take another one of these.
Order filled.
And buy another one of these. And buy another one of these.
Filled.
There we go.
Order filled.
All right, before I finish the thought here, these micro U.S. Treasuries, definitely something that, especially if you have a live account, because I don't think they're on this CBOT, so they're not data that you can get on Rhythmic right now. I'm pretty sure you can't get them on Rhythmic, so they're not going to be available at any of the prop programs yet, but highly encourage people to start to learn a little bit more about the treasury markets. They're the most liquid markets. They're the least frequently traded market by most retail traders. Everyone's messing around with the S&P and the NASDAQ, especially now, and crude oil. And what a day for gold. So I was a huge SOS trader, yes, and I know those people, yes. I was probably one of the biggest SOS traders out there. Started that, and I ran the Beverly Hills office of block trading and the whole Scottsdale office and stuff. So interesting if you know who I am. Yeah, way back in the day. Way back in the day. I've been doing this for a long time.
Order filled.
Long time. All right, that's a little bit more of a decline than I would have liked to see, because we just hit target on the short NASDAQ and now looking for potential reversal in this NASI, but it's just going lower.
Filled.
It's just going lower. Look at this gold. Jeez, I can't even believe that. Down $70 on a thing that I was short from this morning in our trade room. $78 higher. All right. Don't think I'm going to trade anything more over here on I forgot I had a $100,000 account over here. I guess the balance is 101, 184. So sorry. Anyway, we're long here. See how far we are from the -2s though on the Nasdaq? Quite a ways down. So the question, what are the targets? The targets on stay in your lane are the next line. So if I'm long from in the bid zone here, my target is the -1, this line right here. If I got long another one here at the -2s, my target would be up at the same place. So, and then on the range trader, over here, you have your targets are the 34 or VWAP. So in this case, markets keep going lower. And remember, as I mentioned before, this is a day where you could have made a shift a while ago and been trend trading. You don't have to, if you look at this like parallel channel, anyone should be able to sort of draw and see this, right? So, I don't know. Data market, you want to be long here on a Friday. It's the first time in a while. We've had a couple Fridays in the last 2 months or so that have looked like this, but normally Fridays have a little bit of a positive skew to them. But you definitely have some sellers in the market. Definitely rope-a-dope from yesterday, right, where they just ran up Apple, ran up NVIDIA, and then today, all that inventory is coming off. But anyhow, if you did it this way, here would be targets you could use. This is your first tight target, but I wouldn't want that target unless I had another long there. So there you go. So hopefully that helps. All right. What else could we discuss? Just really quickly, let me tell a little bit about how these options work. So let me drag this one over here. All right. So I will typically not trade options on a Friday unless I already had a position on the day before. The MES generally has one expiration per week. Not all the time. Sometimes it has much more than that, but you'll have 2 or 3. But this is trading just the expiration for next Friday, which would basically be the 17th, I believe. Sorry. The 19th is the right here. Okay. So the puts that I am involved with are the 5170 right here. Okay. The 5170s. And at a very, very high level, here's how futures on options work. You take the value that you see there times the point value of the contract. So the MES, if you were to buy one put, let's say you bought a call instead, like a 5200 call or something. If you were to buy a 5200 call and you paid the ask, you'd have to pay, this is bouncing all around, but like let's say 29 times $5 is what your price would be. Let's say it went up to 30. So it'd be 150 bucks. Do not buy futures options. There is almost zero reason to buy futures options. I know some of you are going to say there's reasons you can spread and all this. There's no reason to buy futures options. Just make enough money, have enough money in your account to have the underlying. They're already levered. Why not just buy the 100 delta? In other words, just go long. Don't buy a call, just go long, right? Oh, but the call cost me a lot less money. I get it. Who cares? Just make sure you have $2,000 to $3,000 per micro in your account, and you can just go long. Well, I could spend $150 and use an option. Just don't do that. Not with futures options. Instead, if you had a long in here on the MES at 5150, like look to go long right here into the close. We got about an hour left. You could sell the 5150 put for 47. Let's say it was 50 you sold it for. You get your account credited $250. I don't know if you can see there's net options value that I have in here. The short options value is $285. Go gold. Go up a little bit. All right. Question. Feels like I'd hit my risk budget pretty quickly. Yeah. I mean, if you, this is a day in which mean reversion just did not work. Now, the question is, are you able and have you seen enough markets and have you seen enough visual price patterns to be able to visually identify when and if those days might be the case? And the very first part of learning how to do this is getting better at identifying those days. And instead of shifting and style drift and say, well, today I'm going to trend trade where normally I want to try to learn this mean reversion thing, just stay away or lose less money or identify earlier that it's not an ideal day to be doing that. Okay. I know that's not easy. It just comes from a lot of experience and from a lot looking at markets. As I mentioned before, when you look at this, okay, and if you want it to be measurable in something, let's do something that's measurable instead of just, nonsense of like, oh, it's always easy after the fact to see that it just trended down the whole day. This blue line here, right here, is VWAP, okay? How many times during today's session have we touched VWAP in the NASDAQ? Someone answer me. How many times has price touched VWAP in today's session? Anyone? Come on, somebody fire it up if you're listening. How many times has price touched VWAP in today's session? 0, right? Okay, so you can make a little rule for yourself. If in the first 90 minutes of the cash session, price does not touch VWAP, maybe I want to do something different, right? If they can't even rally it up to VWAP, potentially I'm going to stay away from buying the -2s today, or I'm just going to watch, or I'm just going to observe. Okay, so that's something you can make that's very tangible and measurable. If we can't hit VWAP in the first, and you can pick a time. I'm saying 90 minutes. Man, if they can't hit VWAP in the first 90 minutes, then because the first 10 to 15 minutes are the most random part of every trading session of the New York Open. Just complete nonsense. Algos just banging into each other, total randomness. Okay, it really doesn't matter all that much what happened in the overnight in Globex, except if there's some 8:30 Eastern news. Sometimes that 8:30 Eastern news will give you enough volatility expansion that you can make different decisions. But on your average trading day in which there was no 5:30 news, that's 5:30 Pacific time, the first 10 to 15 minutes are total random nonsense. Okay, but if you want to say 30 minutes or 60 minutes or 90 minutes, if you cannot hit VWAP in that period of time, then either stay away from longs or maybe experiment with finding a level to get short. Okay? At this point, though, I can tell you, whether there's another leg down in the next 30 minutes or not, or they close this really ugly or not, it does not matter. There are no shorts here. You have missed this move. I'm not saying it's more probabilistic that it holds the bid zone here on the NASDAQ or the S&P and moves higher. I'm not suggesting anything like that. I'm just simply saying there's no shorts here. That would be what we would be calling selling into the hole. We do not want to sell into the hole. No selling into the hole.
Order filled.
120. All right. So Marie, hopefully that helped. Oh, good question. So I don't put 3 and 4 standard deviations on the chart because generally they're not that informative and they're not that necessary. Here's a really important statistic to know because we back tested this for a long period of time, and I only have it for the S&P because it was prior for the we did it for the ES and now the MES, but the ES and MES are exactly correlated. But let's go over here. So the question is, why don't we have 2 and 3 standard deviations? The answer is 81.5% of the time, price will stay within 2 standard deviations of VWAP. And if the overnight range is more than 65% of the 23-hour ATR, expected ATR, it's 93% of the time. So what I just threw a lot of stuff out there. On any given day, doesn't matter what the situation is, during the cash session, price will take place within 2 standard deviations of VWAP. How cool is that? If you want to put probabilities on your side, even today where the market's basically just trended down, everything's down about 150 bips, almost 2%, we still haven't got outside the lines. On over here, look at how, let me tighten this up a little bit. Look at how big this bid zone is, right? If we want to measure it from here to here, that's a 100-point bid zone. The 7-day ATR is only 245. So just the bid zone itself is almost 40% ATR. So good question. There are some people in our group that have added a 3rd standard deviation. It's just not very meaningful for me. So there you go. But good question. Now, the one thing that people get confused about when I mention the probability of price staying within 2 standard deviations during the cash session is they say, well, does that mean that a -2 standard deviation has an 80% probability of success? No, not at all. Trading is only about your cost basis, right? Investing is only about your cost basis. People that bought NVIDIA at $50 are going to have a much easier time with that investment than people that are buying it at 900. Both people might make some good money, but only thing that matters is your cost basis. Definitely not loving this this Russell. They are selling the small caps off, even while rates really haven't done a whole lot. All right, last question. You can ask as many questions as you want. I'm going to broadcast for about another 10 minutes or so. Try to make these informative for all the people that watch them afterwards. Let's say you buy at -1, then it goes to -2. Do you hold both contracts to the same target, or you take one off halfway? Great question. So the way I will generally do it is to, well, there's a couple things going on here. So there's another technique we use called the graceful exit, and the graceful exit has to do with if you buy one at -1 and then buy another one at -2, obviously your -1 is already down quite significantly, right? So that contract in and of itself might have qualified for a graceful exit. And now as soon as you get that other contract on, if it continues to move a little lower, I shift entirely to graceful exit mode, okay? Meaning I'm just trying to get out of that particular position as opposed to worrying about where the target is, because it's more threatening where my stop might be or how I'm going to manage risk on that particular trade. Okay? But the answer is multi-entry, multi-target, okay? So that's a simple answer. If you're multi-entering and you have the risk budget to scale into positions, then you're going to be looking to do multi-targets as well. When you short a put to cover your ES long, you would not ever short a put to cover your ES long. If you short a put, then you're long. You'd be adding to an ES. When it goes against your strategies, do you have to rebuy options till the end of the move? Keep adding till bankrupt. No, not at all. So remember, when you're selling, let's just look at the ES right now, okay? Right now, the 50 delta would be like the 51.50, okay? So 51.50 would be the 50 delta down here. So here's where we're looking. Okay. So the first part of your question doesn't make any sense. We're not doing options to hedge another position or anything like that. It's just it's a directional play to get paid a premium to express a direction. In this case, if we're selling a 5150 put, that's a long position, right? Because our obligation, if the market continues to move lower, is we are going to get assigned at 5150 and be long, right? Okay, so as it goes lower, a put goes in the money. If you are short a put, you don't want the put to go in the money, right? You want a short put to stay out of the money. But to answer your question in terms of management, with futures options, because it only represents one of the underlying, first of all, you don't add to the position. You don't sell more puts when it's going against you. Don't do that, because you don't have any more additional levels to work off of. This is developing value area low, bear continuation pattern, outside day down. This is a long that you can take here. If it continues to move lower, you don't have any more longs for this session. So you sell the 5150 put, you have that position into the weekend. The initial and maintenance margin for that is exactly the same as if you held a long position. There's no difference, because the beauty of futures options is they only represent one of the underlying. One MES short put represents one MES contract, not 10, not 100. So if you guys know anything about options, you'll know why this is infinitely more flexible than trading these equity options. Because the vast majority of traders cannot just be naked short puts. Like almost nobody. So, if you're Tom Sosnoff, you can. But what you end up having to do is sell a put spread. The dumbest thing in the world, in my opinion. I get it, for smaller accounts and for all this kind of stuff, and that's what you have to do to define risk. But instead, just have enough money in your account that you can actually just be short the SPX or short SPY puts or short SPX puts. That's how it's really supposed to be done. So if you want to learn, come over to the futures markets where you can do it on the futures markets. Now, so being short on 5150 has nothing to do with being long the ES. It's just like a synthetic version of it, of the MES. Then the second thing is, because it only represents one of the underlying, yes, if you wanted to box that position and quote-unquote hedge or limit your losses and the market continue to go lower, just short the MES. If you're short a put and short the MES, they're offset. You can't lose any more money. The only way you lose money on that is if you short the MES when you're short a put and the market goes up. And if the market goes up by more than the premium that you brought in on the short put, then you're effed. So don't do that, right? And then the final thing is, yes, you can always just close the position. So if you sold the 5150 put for, let's just look what they are. So we'll do it over here. So we'll go to, take a look at the MES. Okay, so we got to go to weeklies here, and this one, and we'll go to 7 days, which will be next week. And we're looking, this is the NASDAQ, which I don't want. I want the MES. When I'm streaming, it slows down this machine on this here. I don't know why. Why is it not bringing up? All right, here we go. There we go. All right, so we'll go to, we want weeklies. Take that 7 days there, make this a little bigger. The 50 delta around right now would be 5150. Look at these, we're way off here. That's where we were earlier. All right, 5150. Okay, so look at the puts here, 45. So if I sold that, this will be super extra credit. If I sold that one contract for 45, what would my account be credited? And what's my obligation? Basically just long one at 5150, right? And I got paid about $235 to put that position on. And if I sold it for 45 and the market continued to go a lot lower, yeah, I could buy it back for 50 or buy it back for 60 and lose 30, 40 bucks. No big deal, right? All right. I'm going to just close these TopStep X positions here.
Order filled.
And close this
Order
one.
filled.
We just popped a little bit. That's a pretty good day. Again, these were underwater, so that's $474 across 5 accounts or so.
Order filled. Order filled. Order filled. Order filled. Order filled. Order filled.
All right, so I think I answered that. We did that to death. Is there a 34 EMA on the 5-minute chart? Yes, there is. So I don't have one on the this right here, this red line right here is a 34 EMA. So on this chart is VWAP with 2 standard deviations, a visible range profile, and a 34 EMA. So good question. And we generally use that 34 as another either target or trend filter. Please share which broker you mainly use. I have too many to share, but I mainly use Interactive Brokers. So almost exclusively Interactive Brokers, but then I have little minor trading accounts for educational purposes and stay on top of everything with maybe 10 other firms. So I have AMP, I have NinjaTrader, I have GFF. I even have a futures account at Goldman Sachs too. Okay, let's see here. All right, so we answered that. Is the option brokerage you use white label version of Open eCry? I remember using it in the early 2000s. So good question. What it is it is through, I'll put the link right in here. You guys can sign up for free and get 2 weeks of free data and try a bunch of different platforms, including a couple web-based ones. So it's Trade Pro Futures. That's if you're not going to use like Interactive Brokers. Interactive Brokers, I think, has a $30,000 minimum to open an account. So you can open one right here with our friends at Trade Pro and tell them I sent you. This will tell them you sent you. And what you'll get access to is Trinity, which is this, which is a thick client right here. So you get access to Trinity Trader, and then you can also get access to iBroker, which is now used to be Gain, now is StoneX. So if you click it, so this is the web-based version. I don't like this very much. It's really finicky, but and they use TradingView as well, so your charts look something like this if they ever load. Watch this. 1,000, 1,000, error loading data. Yes, yes, yes. Error loading data. This is an unacceptable platform. Whatever. So there you go. Let's see if we can load a gold chart, probably. Oh, we loaded a gold chart. Oh, that's not bad. I think it loaded it. No. Is that the price of gold? I'm not sure. I go over to this thing right here. Yeah, it's about right. 2360. Could really use the Dow going up. Would be very useful. Very useful. All right. I wasn't going to broadcast in through the close, but let's see if there's some questions still coming. We can keep asking them. So that's the options brokerage that I use, but I do most of it at Interactive Brokers. All right. Do these strategies work on bonds? Absolutely, but the one that we use on bonds is the range trader right here. So you're singing to me. So the range trader is a 30-minute volume histogram with a few other things going on. So some of our traders do use the stay in your lane for treasuries. I personally do not. So I use only what the chart that you see in front of you. So here on the 10-year right now, we're in what we would call a bear continuation pattern. That's when we're below this 233. So we're mostly looking for shorts. Obviously, the moves, if you weren't following along, we had CPI, PPI this year that created some pretty big moves. Hold on a second. That had some pretty big moves. But this is what we use to trade the treasuries. And I am long and strong the treasuries right now by virtue of being assigned at 109 right here. Okay, great question. Yeah, you can. There's a lot of places you can get a paper trading account. Obviously, you can sign up with any of the prop programs and get access to live futures data, but not to the not to the option stuff. All right, so this particular account, the objectives on these are, I think 53,000. So I normally pass these in about 10 days, and then we cancel and start again. By the way, there'll be a link in the description to our free trade room, and you can kind of see all this stuff in action every day if you'd like. Micro trading, thinking risk first, high probability entries, all the good stuff. I personally have a lot of what I would call position trading in investment swing accounts, but everything that we do for the trading and education and for this broadcast and for Futures Fanatic is day trading only. So the range trader, the 30-minute does not inform longer term holding, but it does inform the position trading that I do that's not part of what I teach. All right, we'll do 2 more minutes. We'll see how this 30-minute candle opens up. $23. We can't see if we can get down to $23. All right, so the next question: for the days that you don't do stay in your lane, like today, it looks like you do more scalping. Do you have strict stops or do you add extra inventory and graceful exits? I don't really have strict stops. Everything is informed by the daily risk budget. So everything's informed by the daily risk budget. So on the accounts that you're seeing here on the screen, these prop accounts here, that I trade the strategies and trade somewhere between 1 and 3 micros across a couple different instruments. So I might have as much as maybe 8 to 12 micros on across all the instruments. I'm just managing them individually on the P&L. But almost everything that I do, I would say is scalping related, because we're just day trading, and the trade room's only open. I'm broadcasting here in the afternoon. I wouldn't be in any trades in these prop programs. And I got in all the trades just to start this broadcast today, so I could have some positions on. So with the exception of this option, this account over here will be flat as well. Okay. All right, so there's that. I think we'll just end by now. Do you by any chance use market internals to find direct? No, I don't. I don't do any market internals. I've done a little bit of everything over the course of my career. Sometimes I make some fun of the jigsaw and all that stuff with the bubbles. And I mean, if it helps and if people are doing well, I try to focus on things that are really simplistic where we can't argue over a particular line, and I don't really give a crap about what's happening at that line. And I marvel at the fact that there's a lot of people that say that they know what they're doing, and, and they spend a lot of time going, oh, there's order flow here, there's this, that, and they're sucking up liquidity, and they're doing all that. I'm like, okay, great. I'm too old to deal with any of that. Plus, I've never found anybody that makes as much money as me, so as soon as I do, then maybe I'll have a little bit more respect for them. Okay, let's see here. I'm going to hit another. So I am going to take a graceful exit here on this NASDAQ. That position was negative for quite a while.
Order filled.
All right. 50% of exchange internal margins for day trading. How much would be for one call or put on the MES? So on the way options on futures work is the initial maintenance margin is the same as the underlying. So if you're like at Interactive Brokers, it's $2,000 per micro. So if you wanted to buy an MES or short an MES, that would cost you about $2,000 of margin. If you want to sell an MES put or sell an MES call or sell an MES on the short side, it's the same. So it's great. You don't have to worry about it. All that stuff with options, equity options, where you're calculating 40% of the underlying and all this stuff to stay short, you don't have to worry about any of that. There's so many great prop firms out there. I'd suggest, for the most part, you look at either Apex, TopStep, or Take Profit. Apex, TopStep, or Take Profit. There's a FX guy that I kind of like, even though for the life of me, I don't know why he trades FX, but his name is Sean, I think, or Nick, or Sean Nick, or I don't know, whatever. But he has some funny stuff where he talks about that institutional order flow, Wagyu beef, oscillator, all this funny stuff. No, look, if it works, and a lot of stuff can work, there's so many ways to make or lose money. I try to be a little irreverent just to, stand out a little bit and just say that for the most part, it's way more than 90% of people that lose. It's closer to like 99. If you want to really supplement and complement your income over time, like I have for 30 years, the only thing that matters is just not losing money. I don't care how, all these things are trying to provide you an edge for your entries and for your strategy and for all that. That's not important. You can push buttons like a drunk monkey. Literally, just go long or short and abide by a $150 risk budget. Half the time you'll hit your daily risk budget. Half the time you'll get to profit or exceed it. In no situation will you ever lose 15 or 10 days in a row or draw down your Apex account to whatever people are drawing it down to. Does that make sense? You can literally just push buttons like a drunk monkey and just hit the close button when your P&L says minus 150. If you just do that, you will stay ahead of the vast majority of traders who are hunting for this elusive edge that doesn't exist. What exists is the fact that 81% of the time, price will stay within these two lines during the New York session. What else do you need to know? How can you mess that up? I mean, I'm serious. How can you mess that up? That's why I teach it. So who cares if the market goes down to 51.36, gets me filled, and continues to go lower? I don't care, because I'll just hit the close button. Hopefully that makes sense. Everybody is overcomplicating this. You're overcomplicating the hell out of it. You don't need to do that. And in my trade room, every single day, I will have up these accounts like right in front of you, the same thing that you're doing. I'm not trading minis. I'm not doing anything that's crazy. I'll have a couple live accounts up in front of you so you can see that this works with a 5,000. This account has $5,344 in it. This account has 10,000 exactly in it, which sucks because that's what I start with every month. $10,015. And I'm not looking to grow this account. What I'm looking to do is not lose money. And what just ends up happening at the end of every month is somehow miraculously it's up somewhere between 5% and 50%. I've had months where I've made $5,000 or $6,000 or $7,000 on this account, micros only. I've had months where I make $500 account. I had last month where I lost $100. Here in the in our Discord channel, we have the channel that I'm most happy about, which is the certificates, but also the withdrawals. And there, right there, I lost $500 going into the last week and brought the account balance down to $99.18. That was for last month. So it was the first month in 4 years that I didn't have a withdrawal. And here are the withdrawals each month. There you go. So just withdrawing $1,600 from a $10,000 account. Withdrawing $1,600. The account got up to $11,607, so I withdrew $1,600. But who cares about me? This is what really matters. People in our trading group taking withdrawals. I wish there was more withdrawals than there are certificates, but a lot of people, are happy to start there. That's where you got to start. We actually have some really big withdrawals in here. I can't remember. And some small ones. There you go, $2,000. All right, that will be it for the session. Yes, 80%, and this is only S&P. We didn't test it for the NASDAQ and stuff. The NASDAQ will tend to have bigger moves and create more range expansion than the S&P. But yes, for the S&P, that's the answer. What do you think about trade day? I like trade day. I think their rules are a little stringent. The one that I specifically don't like is they're real sticklers on trading through news events. And you have to remember all your news events or you lose your account or whatever. I personally have never been funded there. We did a challenge with our group when they first came out, and I passed a couple of them, but just chose not to fund them. But they're a good firm. They have great research. All of the ones that I mentioned on my YouTube channel, if you go to my community channel, all of them are reputable in the sense that you will get paid out if you do what you say you're going to do. People get all spun up around various parts of the programs, which again, if you trade the way we talk about, which is abiding by a daily risk budget, keeping your size under control relative to using these micros, not over trading because you're using a strategy that doesn't give you, too many signals and too much stuff to look at, you'll do fine at any of them. Is it good to go for multi-accounts at first? No. I might. By the way, whenever I say these things, don't eat yellow snow, look both ways before crossing the street. If you knew the difference between good advice and bad advice, this is for educational purposes only. I've even started to get into some trouble about recommending, demo accounts at prop firms. All that being said, if I was to be doing this myself, I would start with a $25,000 or $50,000 account, only a single one. I would pass that, and I would take 2 payouts from it. That'll probably take you 6 months. Are you ready for that? Do you hear what I just said? Not 10 days, not 1 day. What I just described for you will probably take you 6 months if you did it properly. And I would also trade only the Dow Jones, the MYM, which is the smallest contract, easier to handle. And I would use either Stay in Your Lane or Range Trader or both together, and I would become a member of TDG, the best trading community for trading futures ever in existence. Once you have that down, you have basically created an ATM machine. Then you can add 3, you can do 5, you can use trade copiers, you can do whatever you want. And you're welcome to accelerate that curve a little bit. Some people have a natural skill for this. The ones that have the natural skill are the ones that are able to realize that all this stuff about mental game and discipline and patience and all that stuff, plays a role, but not that much of a role. The reason that you are not successful is because you suck at skiing. You're not a good golfer. Pick any analogy you want. You don't take the lift to the top of the most dangerous mountain, do a yard sale all the way down, falling on your ass, chip your tooth, bloody nose, get to the bottom and go, you know what? The reason that happened is because I need to hire a ski psychology coach because I just didn't have enough patience and discipline, and that's why I fell down. Not that I don't know how to ski. Nah, I know how to ski. I love when I get in arguments about people like, it's absolutely trading psychology because I can kill it on a simulator, and then when I get live, I can't. Then I suck. You're proving my point. That's like saying you're fine on the bunny slopes, and as soon as you get on the cliff that you're not prepared for, that you don't know how to trade, then you fall apart, right? I love it. Trading psychology. You know who that's good for? Elite performers. When you are the most elite of performers, you can spend time with Trading in the Zone and Michael Douglas, and is that his name? Douglas, Mark Douglas, whatever. It's mine. Just go over to tradersdevgroup.com. I'll put it in the chat. Tradersdevgroup.com. And there's 2 things you can do over here. First thing I would suggest is you hit this Get Started for Free button and you sign up for the Futures Fanatic free course. This is not some shitty PDF or something like that. It's a 30 video course, soup to nuts. I used to sell it for like $300. It's totally free. Have at it. The next thing you can do is you can come over here and sign up for the Trade Room trial. Also 2 weeks for free, no credit card required. And you can hang out with us. All right, fun time, good stream. Thank you very much, everybody. Is there a discount code for TDG? Once you get into the trial, we have trader advocates and other people that will talk to you or can talk to you within the trade room and tell you about various ways that you can become a member. I don't sell indicators. I don't sell courses. I don't sell any of that. Everything is included in the trade room. And if you can't attend a trade room, every single session is recorded. In fact, there's now more recorded sessions than you could ever watch. So we have more training. You can go back and pick any day you want. Have at it. Go back and look at every single day. And you know what's going to be wild is that in front of you and hundreds of people every single day, I never hit my daily risk budget. Do I make money every day? Of course not. Do I make a bunch of money some days? Some days. But have at it. You can watch all this stuff. Because that's the only way to develop a skill, everybody. You absolutely have to practice, right? You have to practice. Okay? All right, stay green. Trade like you mean it. Hopefully some of you will pop on into the trade room. We'll see you later. Be good.